Hi, Doug Jones here with Doug Knows Real Estate. I got a call from a fellow last week and he said, Doug, I'm going to sell my house and I'm going to move out of state. Do I have to pay taxes? Well, the answer is going to be yes. It's going to be a big yes. And it has to do with capital gain. Now, I'm not a CPA, so don't expect CPA numbers and CPA detail. But I did run these numbers by my CPA to make sure that I'm on track and that I'm pretty close to what I'm telling you. In the case of this customer calling me, he's going to sell his house for $1.2 million. And he bought that house 15 years ago, actually 20 years ago, for $170,000. And so he bought for $170,000. There's a thing they're working for, it's called the basis. They're going to do the taxes off the basis. He bought it for this much. He bought it for this much. He's selling for this much. That difference is what his gain is, and that's the basis is down here. This is a gain, and he also improved the house. Now I don't mean repaired. I mean improved. He put a swimming pool in and a couple other things, and we give him $82,000 there. So take the $1.2 million, subtract the purchase price, subtract the improvement, and his gain on the house on the sale is $948,000. But when he goes to sell the house, he also has fees involved. He's got title fees, he's got realtor fees, got escrow fees, got all kinds of fees involved, and we come up to about 8%, I think about $90,000. Now these are all estimates, okay? But they're pretty accurate estimates. So now we got a gain in that sale of $858,000. Does he have to pay tax on the entire $858,000? The answer is no, because he and his wife own the property together the entire time, and they get a $500,000 exemption. They get a tax exemption for that. So you subtract the $500,000, and now his gain is $358,000. The federal tax, this is 2023. The federal tax on a long-term capital gain is 15%. That comes to, he owes $53,700. Now in California doesn't have a capital gains tax. What they do in the state, they add that income. So he's got this income here. They add it to his other income, all of his income, and then he's taxed on the normal tax rate. So whatever that turns out to be, I think the CPA told me he's going to be about $28,000. But then again, those are his numbers because it's based on his entire income level. So if you sell, you've been here a long time in California, you've got a lot of equity, you're going to sell, move out of state, it's a house you live in, you do have an exemption of $500,000 if you're married, $250,000 if you're single, and you do get to reduce that price you're paying on the taxes because of the fees. You get to write those down, the improvements, and the purchase price. You get the difference there. So if you have any more questions about capital gains, give me a call or send me an email. And like I say, I think this is a pretty good example. I think it's pretty much right on, and I'll give more examples of things where people are calling me and asking me these kind of questions. I'm Doug at DougKnowsRealEstate.com/YouTube.